Welcome to another stage analysis video. It is Sunday the 11th of February 2024. Gonna change up the order of the weekend video this week, make it a little bit different for you. Gonna start off with a look at some of the week's what we call significant weekly bars. There was a number of big movers this week based on mostly on earnings moves as well as some other factors. And then once we get through this bit, have a look at the watch list stocks, and then get into the more regular content, the market breadth, industry groups, bell curve, and what's going on in the major indexes and futures charts, etc. So back to the significant bars here. We've got, starting off with one of the week's biggest movers, which was Net, which is Cloudflare. So massive volume on this week. I think actually one of its highest volumes that it's had, not its highest volume ever. We saw that come back in 2020 there, but it certainly was the second highest volume it's managed to achieve over the course of the last 4 years or so here since it's IPO'd. I think it's a really good example of stage analysis and gives you someone that's obviously newer to stage analysis, or even those that use stage analysis. I think it's always good to go back and have a look at some broader charts to get an idea of how a stock really moves over time, as its price history can really tell you a lot about its future behavior, as they tend to have similar character based on the kinds of institutions that invest in them, etc. So with Net, it's actually a really interesting one in terms of going back to its original IPO. You can see it's actually a similar kind of IPO base structure back here. So we go all back down to 2019 here to the initial IPO base structure. So you can see it started to break out in 2020 in April when the market started to move off of the bottom. So actually an extreme move there. We saw this shake out and move down when the market was crashing during March 2020, but hold up really well and then pushed to new highs early in the latter part of March there and early April. So it was showing some exceptional relative strength while the market was still at the lows of the 2020 bear market there. So in context of another stock that's moved recently in a similar way, you could consider ARM this week, which also had a significant bar, moving up significantly on earnings. So at this point, it's moved to a similar perspective of this. So this got to about 150% on this period here. So ARM has had a shorter IPO base and then broken out and got up to around this level. So I think ARM, in terms of its history, is only about 22 weeks in. I think it's somewhere around this kind of area in terms of time. So it's had a much shorter base and pushing out in a stronger way. But we are in a significantly different environment, as this was obviously the bear market of 2020 for that brief February to March, the COVID bear market, which only lasted for a couple of months before shaking out and then starting to push higher. So in context of this, Net had a very, very strong market for its stage 2 advance, and you can see from the original stage 2 breakout back here in 2020, it shook out with that bear market low there and then returned back to stage 2 again quickly in the latter part of March there, and then its move up to the highs had multiple shakeouts along the way. So as I was saying, this is a really good example, as it did move into stage 3 a number of times, or what I call stage 2B minus a few times. As stage 3, it can be a little bit more, needs to have a little bit more of a shakeout to be considered stage 3. Some people will say as soon as it drops below the 10-week moving average or the 50-day moving average, they'll be like, this is in stage 3. Whereas I always prefer to look for a touch back to the 30-week moving average first to consider it stage 3. I consider it just a weak stage 2 until that point. So differing of opinions on how that works, and some of the technical tools will tell you this is in stage 3, and they'll tell you this is in stage 3, and then they'll tell you this is in stage 3. It's difficult with the automated tools to get it right, and I think that's why they struggle so much. So because there's a little bit of discretion in the stage analysis method, it's not easy to automate the stages. So, and you can have lots of, as I said, you can have lots of shakeouts along the way. So this initial stage 2 advance here, you had an initial shake, came back up again, and then started to move back through that 10-week moving average, back down towards the still strongly rising 30-week moving average, shook out there and then regained that 10-week moving average and pushed higher with a further continuation, and then shook out a few more times through here, actually 3 or 4 times, and actually did turn into a stage 3 range through here, making, let's see, a shakeout move at the up thrust at the top there, shook out to the 30-week moving average, and started to push back higher again and regaining some levels before making a continuation breakout. It did have a V top, which is quite rare, a parabolic move to the highs before rolling over. If you weren't using a log chart on this chart looks much more parabolic than this, so the log scale always helps you to when looking for stage 1 and stage 3. So this did have a parabolic move to the highs and rolled over, came back down in a very brief stage 3, so it only moved, as I said, moved back below that 10-week moving average strongly and started rolling under here, and then got back underneath the 30-week moving average. So there was only about 3 or 4 weeks where it was technically starting to be stage 3 before it actually then started to break down, and we had our stage 4 breakdown. So this level through here, the 200-day moving average, was somewhere around this kind of area. So it broke down into stage 4 through here and then rolled under. And we did have that initial rebound back to the stage 4 breakdown level and rolled again, but then it shook out again. So you can see how hard some of this can be, because some of the people that are much more short-term traders, even if they're position traders, they might get shook out along the way multiple times on both sides of this. You can see as it dropped lower, finally moved back lower again into stage 4 again, actually had that change of behavior move, started to pull back up to the 30-week moving average, but couldn't get back above it and rolled all the way back down again, but then managed to hold and then started to develop a base structure. So technically it wasn't stage 1 until around this point, but you can see it had been basing for a good 6 or 7 months by that point before starting to build a new base structure. So it started to make some new stage 2 attempts, had a failed attempt here, had another attempt through here, which then shook out again, started to roll back under again before finally moving out into stage 2 through this area. So it's now been in stage 2 for a little while here, starting to push higher. We've now had this gap up move on earnings, making that new continuation breakout. So this is something which I label the C entry point. So you've got the A entry point, which is your investor method entry point, the B entry point when you get the pullback and reversal move. The C entry point is what we call the first stage 2 continuation breakout entry point. So it can be where the stock gets more momentum and starts to come out of the initial base. As a lot of the time you can see when you can't see it so much on this chart, but a lot of charts when they move out into stage 2, if we go all the way back here, they can chop around and go sideways for a while before finally pushing out. So you might have a stage 2 breakout back here. Something like ZS this year has been a good example of that, I think, or was it Crowd? One of those two had a good choppy environment for a while before finally pushing higher, and then has been grinding higher in stage 2. So at the moment, this is fairly early in the new stage 2 advance, but clearly in the short term, this is now getting a little bit extended with that gap up move here. So it may need to consolidate for a while here and chop around this $100 level. The $100 level is key. We want to see it hold that level on any kind of pullback, ideally, as if it starts to drop back below there, we could get a push all the way back down to the lower support here. So at the moment, looking for this to consolidate for a while after that initial gap up move. We move on now, and go back. I don't want to go into that one. Let's go on to some of our other significant bars of the week. Let's go on to PLTR. We talked about this on Wednesday's video. Another earnings mover, highest volume ever on this one. You can see the IPO move was a big IPO advance initially. If I can get into the chart on this one, you can see the initial move off the lows had a 400+% move off the low. You can see since the low back in 2022 here, it's now come up another 300+%. But that initial IPO advance, it went all the way back down and undercut, and we started to develop that stage 1 base structure underneath here. This is again a good example of how you can have a selling climax type move, automatic rally, secondary test, start to build some kind of a broad base structure, but that doesn't necessarily mean that's where your stage 2 breakout point is. The stage 2 breakout point on this is a much lower level, because we've got multiple periods where it's tested lower levels here. So you can see 4 times there. So this is your stage 2 breakdown level at a lower level, and you can see the moving average coming in. And if we drop onto the daily there, the 200-day moving average will be below that as well. So we'll quickly just drop down to that daily chart there and take this back a little bit. Yeah. be able to see that there. So this is where it popped out into stage 2. It's above its 200-day moving average, so in early part of May there. So we look at that on the 9th of May, so 9:55 close. Go back to the weekly. You can see that was this week here, so the 9:55 kind of area through there. So that's when it started to move out into stage 2, and it's had a good initial stage 2 advance again. Started to develop a base structure here. You can see a buying climax, automatic reaction, secondary test type move, and up thrust. So started to build this broad structure through this area, and we've now had this continuation breakout on exceptional volume. You can see the relative strength pushing to new highs at the same time, so new 52-week highs, at least a couple of year highs on this one. So it's now moving up towards what we call the turbulent zone. So the life cycle trade defines this as the upper range from the initial IPO advance area. So if we can get a push up into this area, it can tend to get quite a bit more choppy up in this area as it starts to consolidate again. So if this can continue on, we're looking for, after this strong move here, be looking for some kind of consolidation and push up into the upper ranges. So, but at the moment, very, very strong with that exceptional volume coming in. So be looking to see if it can consolidate and then push higher through here. ENPH is another one this week. So one of the group themes we're going to talk about this week in the industry groups relative strength rankings is the solar group. The renewable energy stocks are starting to come back into potential stage 1 base structures. So ENPH is a good example of this. We've had what we call a selling climax, an automatic rally, and now a secondary test. So we've got the starting, what we call phase A of a potential base structure developing. This could obviously continue and make an early stage 2 breakout, but if it does, there'll be a lot more overhead resistance, as we're still got this time-based resistance from this stage 4 decline. This isn't a very big base structure at the moment, so what we'd be looking for is for it to develop further. So potentially we might be looking for a base to develop through this area, as that's quite a big range. So it could have an early up thrust and then start to develop and come back into the range as this starts to turn back round again, start to develop, and then push back out again. You may even get spring type behavior and come back up again, or it might roll over, who knows. But point is, it's starting to develop some kind of base structure. How that base goes is obviously up for grabs here, but we're seeing a theme across the group of multiple stocks starting to make early moves, either into stage 1 or still in what we call stage 4B minus, where they're too early to be considered stage 1 yet. They're still strongly below declining 30-week moving averages or 200-day moving averages, and they're still only just starting to develop base structures. So, but there is definitely a potential theme in the group with multiple stocks in the group having the same kind of behavior. So this is what we call the forest for the trees approach in the stage analysis method, where we start to look for groups at this stage, and then it's one of the earliest entry points for potential swing traders to start consider at stage 4B minus moves. But the investor method happens a little bit later in the stage 1 base and at the stage 2 breakout point. So it's a time to start tracking them, look at the group in detail, look for potential leaders, and then we can then potentially get into them at the right entry points for the method. So ENPH, and if you have a look at the rest of the solar group, is also an interesting one here. RBLX, another one that's building a big base that was an IPO stock. So we're seeing a number of these at the moment starting to turn around and move back out again. Had earnings this week, so it's got strong future revenue growth. I think its EPS is rubbish. We don't really look at the fundamentals in the stage analysis method, but when you're considering it from a fundamental perspective, I always think looking at the future revenue growth is a good sort of aspect to it that you shouldn't ignore, as if a stock is obviously not making any money and not got any predicted not going to grow their revenues in future, then it's potentially not going to have a huge stage 2 advance, and it's much more likely to be a shorter term speculative move. So it can help you when you're in investor method positions, but it's technically not part of the system. But I do think it's useful to look at the sales and revenue figures, especially the revenue figures for obviously future projected revenue. So TradingView has a really good thing that you can do. So if I go to, let me quickly go to TradingView, RBLX, for example here. So you can see here, if you go into here, click on the E here where they've had earnings, click more, right, RBX earnings, click on the earnings tab. You can do annual, you can see obviously negative on the earnings side here, but you can see revenue growth. It's making 4 billion, 4.95 in 2025, 4.95, 5.89, then 7.31 billion. So it's projected future revenue growth, and the EPS is projected to grow even though it's negative for multiple years still. So I find that useful to quickly scan through to, as it's something you can use as for the investor method to determine the quality of a stock. As if the stock has got no earnings, no revenue, then you know it's a much more speculative type of stock and play, or if it's got negative earnings and like poor margins, all that kind of stuff that people look at in the fundamentals, then it gives you much more context of whether it's a swing trade or whether it's something that's worth a longer term investor method look at. So RBLX, clearly with potential future revenue growth and huge revenues in the billions, could potentially move into stage 2. It's not there yet, but if it does make a move through here, we get a strong move, ideally with some stronger volume, then that would be a potential stage 2 breakout. You can see we've got multiple levels through here that this area has been tested. This is why this is the stage 2 breakout level. So this lower level could be considered stage 2. If you look at it on the daily, it's above the 200 day and it's broken above the pivot above the 200 days. So technically it's already in stage 2, but the fact that it's had obviously these multiple tests of this high and it's blocked it every single time. So what we got there, 6 tests in the last year basically, in a bit. So to me, this is the level to watch. This is the stage 2 level. So if we get through here, then that to me would be a stage 2 breakout. So you can see the broader structure here. You've got the original selling climax, automatic rally, and secondary test areas through here. You could argue this is the automatic rally secondary test and this is nut thrust, but either way, you've got this broad structure with it's still within, and it's been going sideways for the course of the last year and a half. So we're looking for it to start getting back through this, ideally this sort of 46 to 47 area, but then pushing through this 50 and above to start clearing some of this older resistance. And then you can see this was the IPO week low back down at 60, so it's still below that level. So until it gets back above that level, then it's still obviously in the more speculative area and hasn't yet recovered that initial IPO move. So again, an interesting one, and one to consider for a future stage 2 breakout attempt.